1980. A black-owned company in Los Angeles controlled $4 billion in life insurance. It had offices in 24 states, financed homes banks refused to fund, and insured families America's biggest companies wouldn't touch. Then, over the next 30 years, it vanished. $4 billion. Gone. So how does an empire that powerful disappear? And where did the money go? This is the story of how a $4 billion black insurance empire that ran Los Angeles vanished without a trace. The promise he couldn't break. Starting with the man who began everything, William Nickerson. William Nickerson Jr. was born in 1879 to a farming family in Texas. He became a school teacher, then an insurance man, and along the way helped bring one of the first lawsuits in the American South aimed at letting black citizens vote in primary elections. In 1908, he organized the American Mutual Benefit Association, the first black-owned insurance company in Texas, and ran it for 16 years. In 1921, the company sent him to Los Angeles to open a California branch. What he found there shocked him. He found out that over there, most of the roughly 16,000 black residents in the city could not buy life insurance at any price. And that was because the companies willing to sell to them charged inflated premiums for reduced coverage. Nickerson spent 3 years building a client base anyway, eventually insuring more than 2,000 people. Then eventually, the Texas company lost its license to operate in California, and every one of those policies became worthless overnight. Nickerson hadn't broken that promise. But he was the one standing in front of 2,000 families who trusted him with it. Rather than walk away, he decided to build an entirely new company to make good on coverage that technically wasn't his responsibility anymore. He couldn't afford a lawyer, so he bought a set of California law books and taught himself the state's insurance code. He partnered with Norman O. Houston, a young insurance salesman, and George A. Beavers Jr., a Los Angeles businessman and church leader. Houston raised the $15,000 deposit the state required. Beavers signed up 500 people willing to prepay their premiums before the company even existed on paper. On July 23, 1925, the three men opened Golden State Guarantee Fund Insurance Company in a one-room office above a storefront on Central Avenue, with $17,800 in total capital. Within 3 months, they'd outgrown it. By the end of year one, they'd opened a second office in Oakland, sold over $260,000 in policies, and banked a surplus of more than $16,000. From the start, the founders described their mission in 2 parts: provide black Angelenos with insurance protection, and provide them with dignified employment, the kind consistently denied to black professionals everywhere else in the city's economy. Golden State was never only in the insurance business. It was in the business of building an alternative economy from scratch. The company that would eventually control $4 billion in policies existed in the first place because one man refused to let 2,000 people lose coverage a second time. That refusal became the culture of the entire company. It would resurface decades later, in a boardroom none of these 3 men would live to see, building what the banks wouldn't. Within 3 years, Golden State had grown past 100 employees, including 60 agents, with branches in Pasadena, Bakersfield, San Diego, and Fresno. In 1928, the company built its own headquarters on Central Avenue, using entirely black architects and labor. The Spanish Colonial Revival building was designed by James Garrett, only the second black architect licensed in the state of California. The company took the top floor and rented the ground floor to local merchants. Golden State stayed profitable straight through the Great Depression, a feat most companies of any size couldn't manage, and started paying dividends to policyholders in 1930. The name changed to Golden State Mutual Life Insurance Company in 1931. By the end of the decade, assets had grown to $437,000, backing $6 million in active policies. The company kept expanding through the war years, opening an Illinois office in 1938 and a Texas office in 1944, Nickerson's home state. By the end of World War II, Golden State held $2 million in assets, $750,000 in surplus, and close to $24 million in force. But the number that mattered most wasn't on the balance sheet. Federal housing maps drawn in the 1930s graded black and integrated neighborhoods across Los Angeles as the highest financial risk. a rating that made conventional lenders unwilling to write mortgages there at all, regardless of a family's income or credit. Golden State's mortgage division stepped directly into that vacuum, financing homes and small businesses in neighborhoods federally backed lenders had effectively written off. Insurance was the product on paper. Home ownership was the actual mission. That growth demanded a bigger home for the company itself. Building it meant hiring a young architect who understood, better than almost anyone in Los Angeles, exactly what Golden State was up against. The architect who drew upside down. Paul Revere Williams was orphaned before he turned 4 and raised by a foster mother in Los Angeles who told him he could do anything he wanted. What he wanted was to design buildings. In 1923, he became the first Black member of the American Institute of Architects, and in 1957, its first Black fellow. Over a 5-decade career, he designed close to 3,000 buildings across Southern California, including the Beverly Hills Hotel and homes for Frank Sinatra, Lucille Ball, and Barron Hilton. He also developed an unusual skill to survive his own industry. Many white clients were uncomfortable sitting next to a Black man at a desk, so Williams taught himself to draw upside down, sketching a room from across the table so a client could watch their home take shape right side up while he worked it out in reverse. He later described it as more than a trick. Clients felt like partners in the design. It was also, plainly, a workaround for a country that wouldn't let him sit beside the people paying him. Williams spent his career designing mansions in Los Angeles neighborhoods where restrictive covenants meant he was not legally permitted to live. In 1946, Golden State's board hired Williams to design its new headquarters at the corner of Adams Boulevard and Western Avenue. The same skill that let him build for Hollywood's elite from across a table was now going toward the building meant to represent Black economic power in Los Angeles. Hiring him wasn't only about talent. It continued a pattern the company had started in 1928, when it built its first headquarters using entirely Black architects and labor. By the mid-1940s, Williams was already becoming known across the city as the architect to Hollywood's biggest names, the very years he took on Golden State's headquarters. For a Black-owned insurance company to commission the same man designing homes for Frank Sinatra sent its own message. So, Golden State could compete for the best talent in Los Angeles on its own terms for its own building. It was proof an entire self-sufficient Black professional class, architects, artists, agents, could be built alongside the company itself, one commission at a time. Williams could design the building. What happened inside it, in the years right after it opened, would end up mattering just as much. By the time this story ends, the company built to keep one broken promise will control $4 billion in policies across offices in 24 states. Then, on a single day in September of 2009, a state regulator will walk in and shut the whole thing down. That part is still decades away. First, the fight over who got to build the empire and who got to live anywhere near it. A new address, a new fight. William Nickerson Jr. died on November 14, 1945. Norman Houston, who'd spent 20 years as corporate secretary and treasurer, became president. George Beavers moved up to chairman. By then, Golden State was already the 7th largest Black-owned insurance company in the United States and the largest Black-owned business of any kind west of the Mississippi River. While the new headquarters was under construction, Norman Houston was fighting a different battle at home. He lived in West Adams Heights, a neighborhood white residents were trying to keep segregated through a racially restrictive covenant lawsuit aimed at removing him and his Black neighbors, including actress Hattie McDaniel. Houston helped organize the West Adams Heights Protective Association to fight the covenant in court, and the neighborhood won. His grandson still has the notebook documenting those meetings. Golden State's new headquarters opened in August 1949 after a week-long celebration, at a cost of just over $1 million once furnishings were included. One contemporary account called it the finest building erected and owned by Black Americans in the nation. Inside, a 2-story lobby was framed by 2 murals on opposite walls, each canvas more than 16 feet wide and 9 feet tall. Charles Alston's Exploration and Colonization and Hale Woodruff's Settlement and Development. Commissioned to depict Black contributions to California history, The murals opened with the black settlers among the Pobladores who founded Los Angeles in 1781 and closed with the founding of Golden State itself, nearly a century and a half later. Norman Houston later said the point of the murals was to show the next generation that people who looked like them had helped build the state they lived in. The same year Houston was choosing how that history would be told on the walls of his own company's lobby, he was also in court arguing for the right to keep living in his own neighborhood. Both fights were about the same thing. Only one of them was finished. With the building finished and the company's standing secured, Golden State was about to get a shot at a market that had been closed to black-owned insurers for its entire existence. The breakthrough. For decades, Golden State and every other black-owned insurer had been locked out of one of the most profitable corners of the industry: group insurance, the large policies corporations buy to cover their own employees. White-owned insurers, insurers controlled that market, and white-owned corporations weren't interested in signing group contracts with a black-owned company. Civil rights-era pressure and new affirmative action requirements started prying that door open in the late 1960s. That opening didn't happen by accident. Title VII of the Civil Rights Act barred employment discrimination, and federal contractors soon faced new pressure to prove they weren't shutting out black-owned vendors and partners either. Corporations that had never once considered a black-owned insurer suddenly had a reason to take the meeting. Golden State's own leadership, many of whom had spent the previous 2 decades marching, testifying, and organizing for exactly these kinds of civil rights protections, found themselves benefiting directly from the laws they'd helped win. Golden State pushed through the opening. Between 1968 and 1970, the company's group insurance business exploded from $59 million to $202 million in force, a more than threefold increase in 2 years. Golden State began underwriting group coverage for major corporate clients, including J.C. and McDonald's. Assets that had stood at $44 million in 1972 kept climbing through the decade. The same political shift that finally let Golden State compete for corporate America's business was, underneath it, starting to let corporate America compete for Golden State's customers too. Nobody in the boardroom was thinking about that yet. They were busy building the biggest version of the company that would ever exist. The peak. By the 1980s, Golden State Mutual employed more than 300 people across offices in 24 states, with over $4 billion in policies in force, one of the top 3 black-owned insurers in the entire country by size. Under President Larkin Teasley and CEO Ivan Houston, the son of Norman Houston, the company rolled out new products and hired Dallas Cowboys running back Herschel Walker as a spokesman to court upscale black consumers. The company's reach went beyond insurance. In 1965, an employee named William Pajard, who joined in 1957 as art director and later ran the public relations department, proposed starting a corporate art collection to mark the company's 40th anniversary. Over the next 2 decades, working with a modest budget, Pajard built a collection of more than 200 works by Black American artists, including Jacob Lawrence, Elizabeth Catlett, Romars Bearden, Charles White, Betty Saar, and Henry Ossawa Tanner, alongside African sculpture and masks from Ivory Coast and Gabon. The pieces hung throughout the building's offices and hallways. By its peak, Golden State wasn't just running an insurance empire. It had quietly become one of the largest corporate patrons of Black American art in the country. Few corporations of any race were assembling collections like it. Art historians would later cite Golden State's holdings as among the most significant corporate collections of Black American art anywhere, built inside the hallways of a life insurance company rather than a museum. Employees walked past original Jacob Lawrence and Elizabeth Catlett works on their way to underwriting meetings. Policyholders visiting Adams and Western to file a claim were, without necessarily realizing it, standing inside a working art museum. That collection was supposed to signal permanence, proof the company would still be collecting art 60 years later. The same decade that produced these numbers was also the decade insiders in the industry started quietly admitting something had shifted. The victory that hurt. In 1962, George Beavers took on the additional role of president of the National Insurance Association, the trade group representing Black-owned insurers nationwide, a sign that industry leaders already sensed trouble ahead. 2 years later, the Civil Rights Act passed, and broader integration followed. mainstream white-owned insurance companies started selling policies to black customers directly for the first time, something they'd refused to do for the previous 40 years. That was the exact goal Golden State's own leadership had spent decades fighting for. It also erased the market gap the company had been built to fill. National insurers like Prudential, John Hancock, and Metropolitan Life didn't just start selling policies to black customers. They started recruiting black insurance agents directly off the sales floors of companies like Golden State, offering salaries the smaller black-owned firms couldn't match. Golden State wasn't only losing customers to integration, it was losing the sales force that had built the company in the first place. In 1970, Norman Houston's sons, Norman B. Houston and Ivan J. Houston, took over active management. The pattern repeated itself across the entire industry, not just at Golden State. When trade publications first started tracking black-owned businesses, there were 42 black-owned insurance companies operating nationwide. By 2004, only 5 were left standing, and Golden State was one of them, still ranked among the top 3. Losing that built-in advantage didn't kill Golden State overnight. It took almost 3 decades. And it would take one very specific decision made quietly by its own board before anyone outside the company noticed something was wrong. The collection goes first. In 2000, as Golden State Mutual Insurance Company celebrated its 75th anniversary, employees gathered to open the time capsule that had been sealed inside the cornerstone of the company's headquarters when the building was dedicated in 1949. The capsule offered a glimpse into the optimism and ambition of an earlier generation that had built one of the nation's most successful black-owned businesses, despite segregation and limited economic opportunities. For a brief moment, the ceremony connected the company's celebrated past with its uncertain future. Financially, Golden State still appeared significant. By 2003, its assets had grown to approximately $121 million. And it remained, by some measures, the third largest black-owned insurance company in the United States. Yet those figures concealed a far more troubling reality. Mounting operating losses, increased competition, and persistent financial pressures were steadily eroding the company's stability. The most symbolic indication of its decline came on October 4, 2007, when the board quietly auctioned off the company's renowned African-American art collection. Built patiently over 4 decades, the collection consisted of about 200 works that reflected Golden State's commitment to preserving black history and culture. In a single day, that legacy was dispersed. Although 124 pieces were eventually acquired by Los Angeles County, ensuring that at least part of the collection remained accessible to the public, many other works disappeared into private collections, effectively removing them from public view. By 2009, Golden State's operations had contracted to just 12 states, roughly half the territory it had served during its peak in the 1980s. 6 consecutive years of net operating losses had left the company with few options. Selling the art delayed the inevitable, but it could not prevent the company's eventual collapse. September 30, 2009. On September 30, 2009, California Insurance Commissioner Steve Poizner placed Golden State Mutual into conservation after its surplus dropped below the state's required minimum. Conservation is not bankruptcy. It's a state regulator taking direct legal control of an insurance company's operations, account by account, because the state no longer trusts the company to keep running on its own. The sale of new and renewal policies stopped immediately. The state's Conservation and Liquidation Office took over daily operations of an 84-year-old company. California ran a national bidding process, and more than 40 life insurers competed for the right to take over Golden State's policies, proof that even in collapse, a book of business built almost entirely on trust inside the black community still had real commercial value to outsiders. In June 2010, the court approved a rehabilitation plan. IA American Life Insurance Company, owned by Industrial Alliance, Canada's 5th largest life insurer, would assume every one of Golden State's in-force policies and absorb its bonds, stocks, and mortgage portfolio in exchange for an $11 million payment to the estate. In December 2010, the receiver filed for full liquidation based on insolvency. The court entered that order on January 28, 2011. The employee pension plan was terminated that June. The company that began because one man refused to abandon 2,000 policyholders ended with its own policyholders handed off, not to another black-owned firm, but to a Canadian insurance conglomerate that won a bidding war. The policies were gone, the staff was gone. What was left was a building on the corner of Adams and Western, and an unresolved argument over what would happen to what was still hanging on its walls. What's left on Adams and Western? The headquarters building was sold to Community Development Impact, a social service agency serving people with developmental disabilities. In 2011, it was named a Los Angeles Historic Cultural Monument, protecting the structure even though the company that built it no longer legally existed. That same year, an effort emerged to remove the Alston and Woodruff murals from the lobby and sell them to the Smithsonian Institution. Preservation groups, including the LA Conservancy and the West Adams Heritage Association, fought to keep them in place. In 2013, a legal settlement was reached. The murals would stay exactly where they'd hung since 1949, in a lobby that now serves a nonprofit's clients instead of insurance customers. The murals survived because of a lawsuit almost nobody outside Los Angeles preservation circles ever heard about, which means the only physical trace of an 84-year, $4 billion empire came within a legal settlement of ending up in a Smithsonian storage room instead of on the wall it was painted for. Much of what we actually know about Golden State today survives because of a separate archive. Nearly 3,000 items, letters, photographs, board minutes, oral histories, donated to UCLA's library. It's a strange kind of afterlife. A company built to give Black Angelenos financial permanence is now preserved mostly as paper in a university reading room. The $4 billion didn't vanish in any dramatic sense. It moved through the same ordinary bureaucratic machinery that absorbs every failed insurance company: conservation, reinsurance, liquidation. What actually disappeared was something no balance sheet could capture: an entire financial infrastructure that Black Angelenos built for themselves, because no one else would, folded quietly into the very system it had spent 84 years working around. Most Black Angelenos driving past Adams and Western today have no idea what building they're passing, or that it once anchored an economy larger than any Black-owned company on the West Coast has managed since. The murals are still there floor to ceiling inside a lobby that isn't an insurance office anymore. Golden State didn't collapse because nobody protected it. It collapsed because the equality its own founders had marched and organized for eventually made a separate Black economy unnecessary to survive and impossible to sustain. And that's the story of how a Black-owned company that once managed over $4 billion in life insurance policies slowly disappeared. Now tell me, do you think Golden State Mutual was destined to fail? Or do you think it could have survived if history had unfolded differently? Let me know what you think in the comments section. Don't forget to like and subscribe to Black Status for more videos like this. See you in the next video.